reacting to the reports of that deal which is likely to happen with Blackstone. So that stock holding up with a gain of around 5%. But what's happening with Eicher? Because of course we got the earnings overnight and that looked quite impressive. So let's try and decode the behavior of the commercial vehicle segment there with Mr. Vinod Aggarwal. He's the MD and CEO at Eicher VECV joining us on the show. Mr. Aggarwal, hi, good morning. Thank you so much for making time. Well, what's the overall sales outlook for FY24 looking like in terms of commercial vehicles? Do you think it's likely to be better than financial year 23?
As of now, if you look at the commercial vehicle market, the industry, if you look at the industry, I think we have seen good growth in first 4 months in some of the segments. For example, the heavy duty trucks, they are growing by almost YTD basis around 13%. Similarly, buses are growing by 34%. However, there is major stress in exports out of the country. Exports have dropped significantly by 37%, and there is some drop in the light and medium duty trucks. So there is a mixed, you can say, performance as far as the industry is concerned. So overall, 3.5 ton and above industry, first 4 months has grown by 1.7%. As against this, at VECV, we have grown by 8.5%. So therefore, we have outperformed the industry. Our market shares have improved, and we are expecting that the balance 8 months for the industry are going to be good, because there are various reasons why the industry will do better. First of all, I think monsoon is doing well, and because of that, rural economy is doing better. Apart from that, the infrastructure investments are continuing, and still there is a lot of pent-up replacement demand, because I think the trucks are due for replacements, because the new trucks which have been designed after BS6 and BS6 OBD2 norms, they are much more productive. Therefore, if you replace these old trucks, you can get better efficiency, you can get better costs. Therefore, it makes a lot of sense to replace these trucks, and that's what the customers are doing now. And you will see more and more replacements coming in. So therefore, based on the economy overall doing better, infrastructure investments, good monsoons, and replacement market, you will see good demand in the balance 8 months.
What are you gaining on domestic market? Are you likely to lose because of the drop in exports?
Exports, of course, is the one dampener, and large impact is coming from South Asian markets like Bangladesh, Nepal, and Sri Lanka. Bangladesh, that used to be almost 40 to 50% of the exports out of the country for commercial vehicles, has dropped by almost 70% plus. And similarly, the situation in Nepal. But on the other hand, good news is that the exports to Middle East, they are growing, and exports to African region, they are stable. They are, in fact, some countries are down, some countries are up, and overall, African region is relatively doing better. And then there are growing export regions like Southeast Asian markets or Latin American markets, where the exports have started happening from the country, and you will see more and more traction coming from these regions. So therefore, potential for exports continues to be very good, but current year exports, right now, they are under stress, and it is largely because of the foreign exchange situation in South Asian markets of Bangladesh and Nepal.
That gives us a good understanding of how things are panning out in the international geographies. But within India itself, there seems to be a sense that it's the higher discounting which is leading to the volume growth that we are seeing. And that's what at least we're hearing from ground reports. And perhaps that's the reason your margins have slipped on a quarter-on-quarter basis. Is that the correct understanding? And what's the discounting likely to be for the next couple of quarters?
In fact, on the discounting front, there has been improvement in the last quarter, because I think everyone in the industry has realized that discounting is not the right way of managing this market, because the type of discounts that were going on, those are not sustainable. Therefore, I think if you look at the industry performance as compared to the previous year Q1, all across, everyone has improved on the margins. For example, our EBITDA margins, they are in the last quarter, they were at 7.5% as against around 5.5% in last year Q1. Of course, you can say that there is a drop from Q4, But Q4 is always a bumper quarter, and you get a lot of leveraging advantage in Q4. However, overall price management has been better in Q1, and going forward, it is expected that this pricing, the discounting should be better and better only. There should not be any further negative impact on account of discounting. On the other hand, we are seeing good softening in the commodity prices and overall supply chain scenario. So both inflation and supply chain both are stabilized. So therefore, we are not expecting much cost pressures coming from inflation side. So therefore, I think overall, let's see, we should have a better position.
Will you be able to get into the double-digit margin range by the end of the year? Because last year, what you did last quarter, you did 10% thereabouts.
Last quarter, we did 7.5% EBITDA margin. It is very difficult to say that whether it will be double digit or it will be. But if the volume goes up, which is likely to go up, because the second half is always better than the first half in the industry. So therefore, when the volumes will be more, you will get the leveraging advantage.
Aggarwal, on that note, we'll let you go. Appreciate you joining us on the show. So the discounting is abating in the segment and overall growth looks healthy. That's the word coming in from Mr. Aggarwal of Eicher VECV. But time now to slip into a very short break. Don't go anywhere.